Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Monday, August 5th, 2024. It's 10:35 a.m. Eastern Time as I'm starting the video, so we're an hour into the trading day. I'll start here. This is the nature of a market that, had a lot of hot air in it. Did yesterday because the RR wasn't very favorable anymore. I had pulled this trade at T4, which is a nice 50% gain. Remember, this is the unleveraged version. You don't even need leverage. I don't even know why they make the leverage ETFs on the VIX. But and look at just for reference. There's T5. That's exactly where we hit today at the high, right there at T5. So it all lines up. There's, in other words, look, guys, I'm going to talk about the market, and we're going to stick to the market here. If somebody asked me about gold, I'll share. I don't have a strong read right now on the chart of gold, silver. I think if the market rallies, which is what I obviously think, from here today and or especially this week, if it holds today, it's probably going to rally this week. Potentially explosive, potentially a rip your face off type rally. Just has to hold the recent lows, and I'll go over my trading plan and all that with you. But again, this just shows that the market, VIX is trading the stock market upside down. It's just when my price targets in the stock market are hit, that's usually when my price targets in the VIX are hit. So there it is. If anyone happened to hold out for more, kudos to you. You got 116% on unleveraged ETF in a matter of just a couple weeks. And now on to the charts. Let me start out with QQQ. Bigger picture, swing trend targets first laid out on the 26th of June right here. Gave you my market top range. We came within 1.5% of that, close enough to the top. And then more importantly, sell signals followed with bearish engulfing candles on the daily, breakdowns on the 60-minute charts, wedges, trend lines. And so that's it. So we hit, remember, I modified in recent videos. I put a note here during that video on July 29th that said, look, this really should be our making that T2 and then just resequence the other targets. So I did that for you. And that was today. And again, that was because all along I've been calling for a pullback to the 200-day moving averages. And as I stated before, it is very common to see and this is a weekly chart. So, oh no, this is a weekly. I don't know why it says 200 week moving average. It's actually the 40 period. No, that's the wrong line. Never mind. This is it right here. The 40, the red line's a 400, 40 period exponential moving average. That's on a weekly chart. It's the same as a 200 day, and then the 200 day or 40 week in blue. And you can see they both come in together, and that's what I was talking about. So we overshot them, which is very common when you go back in time. You see when you come and visit them, quite often you punch through there, especially on a daily basis, only to close the week, either that day or within the next several trading sessions back on it. And I call that a momentum fueled overshoot. You almost have to expect it when you have a lot of downside velocity or momentum going into a support level. And so we overshot it this morning in anticipation of it before it even turned, got out, post out to you. We'll probably park on. If we do, then the markets are going to see, oh my God, that's the 200 days held. And we have, like I said, it's that whole, if you like, QQQ or you like NVIDIA up at wherever it was, you got to love it here. If you like QQQ at 510, and I know a lot did, you got to love it here. And I know that sounds a bit facetious. But either way, whatever. It's bottom line, guys. It's technical analysis. Like I said, trade off the fundamentals. You get your head bit off in this game. You can't. Long term, if you got a 10-year time horizon, you're great, like Warren Buffett, at reading balance sheets and income statements. Go ahead and trade off the fundamentals. If you're here to, kind of time your entries and exits and make money actively trading and swing trading, trend trading, technicals are the only way to go. I will factor in the fundamentals. As I often do. So that's it. Let's just see where we go today. Let's not get ahead of ourselves. And let me talk about the risks, because the risks here are bilateral. So to kind of recap, on Friday I actually went home because we were at support right there. We were at T1. You can see it here on my weekly chart, and I showed you on the daily as well, same level. We closed at support. And so I thought, as I like to say, support is support until it's broken. It was taken out, and when the future slid last night, so we opened up Sunday evening 6. I immediately got stopped out of my NQ trades. I thought about reversing. I wish I could tell you I reversed to a short because we were below there. Let's look at the futures real quick. That shows a little better because that's the thing about ETFs. There's just a big void here, and there's no story being told on the charts. A technical analysis is a story. It's a story that's developing in real time, a story between buyers and sellers. That's really all it is at its essence. Supply and demand, buying and selling. So that's what the futures will tell us. So last night we opened up right under T4. Remember, we parked there on Friday and then started taking it out. And that was broken support, but we weren't down below far enough either way to thought to throw shorts on, but that's fine. So this morning when I woke up, we had the futures down big. We were at, like I mentioned, just so many things there. We had the indexes at the 200-day, a lot of big, I'm going to go over that right now, big stocks there. You had T6 right here hit on NQ to the button within 1 point, literally. I think the low was 17,351 versus that 17,352 target there. Good support right there. Very oversold so far. Nice reversal. And somebody asked, and I'll get to that in a second, targets. I did give you this chart. I followed up after the first post today, gave you some potential bounce targets. I'm kind of playing it by ear. I'm not looking for 2-3% bounce. I'm looking for what's probably going to be a double-digit bounce if we get it. And the technical catalyst will be the oversold conditions, the hit of a good support level. We'll look at divergences, the fact that markets and many key stocks are at the 200-day moving averages, and then fundamentally the same folks that were supporting this rally and saying, oh, it's okay, valuations don't matter, these high valuations, because we're going to get a rate cut. And every time those rate cuts were pushed back further and further and further, they kept that same narrative going that the Fed's going to pivot, we're going to cut rates, and they're going to cut rates into a growing and strong economy. So a couple things have changed. Now the recession odds spiked up. I've been adamantly and vehemently telling you we're going to get a recession. It's coming soon, and it's not going to be talks between no landing and soft. It's going to be we're going to have a real recession. I still believe that, and that's what happened last week. I've been highlighting a trend. It's been ticking up. It was being dismissed, the unemployment numbers, the employment data, and finally it's kind of, as I said, starting to accelerate now. Same with all the other ISM and that good stuff. However, again, the market will, I believe, rally on the fact that, hey, guys, guess what? You're not just going to get that quarter-point rate cut you've been clamoring for over a year now. Now the odds say you're going to get a 50 basis point cut from the Fed. And so, the Pavlov's dogs will do what they do. And they step in and buy, and they'll use that narrative. I believe that's what they'll be bringing the cheerleading squad out in full force on TV as soon as the market stabilizes. Right now, they don't know what to say, and you'll see them come out and say, "Oh my gosh, this is it. You wanted to buy." And look, I'll say it too. If you've been bullish, and look, I'm buying it. I'm market agnostic. I don't care Nvidia if I go long, short, or QQQ. But all those folks, and remember, guys, the vast majority of not just the general public that's buying stocks, Joe Schmo, armchair investors, but even the smartest, quote unquote smart, the pros on Wall Street, they're inherently bullish because the vast majority are long side only. They don't short, can't short. It's not in their purview or their perspectives, or they're even in their skill sets. So you got, majority of players long. Let's keep it simple. Let's not overthink it. It's a pullback to support in the 200-day moving averages. It's the first time that we've come back to the 200-day moving averages since right here. And you can see what happened at that point right here. And it's the first time we took them back here. We went above them, back tested them, and we got all this. So it's just, again, a level, and it's not uncommon to shoot through, just like here on the upside. You overshot the 200 exponential a little bit. You overshot the exponential, got rejected off the simple. And I've covered this many times. So It's not a guaranteed buy level. It's just a high probability buy level. And again, even if you overshoot it for a day or two. Now, as far as trading plans go, let me get to that. Let me cover that because I know a lot of people are, hey, what to do. So somebody asked, somebody asked about RTY. Just so you know, this is the last comment I replied to. I gave my 120-minute chart and daily charts if you want to check those out. I said personally I favor NQ over the small caps right now. I also don't have that good a read on the small caps and direction for IWM or RTY. And I went on to say, I get that whole rate cut thing is coming, small caps should benefit. But I think most or all that was already priced into the rally that you had in the previous months or so. And then B, recessions tend to hurt small caps more than large caps. As I've been emphatically saying for a while now, recession is coming, and it's coming sooner than the bobbleheads on TV say it is. So that's not going to be net positive. So now, look, I have no horse in that race. QQQ right now, that's my thing, pushing that hard. Things like NVIDIA should outperform. They're going to come in again, buy those big names. And if I'm wrong, let me go to where I had a trading plan. Somebody asked targets and all that. I gave you some rough targets. I think it was here. I'll try to catch up to the rest of the comments when I can, but I'm really hyper-focused on the markets now. Metals, like I said, somebody asked. I'm not sure. The charts aren't that clear to me on the metals. But if the stock market rallies hard this week, as I suspect it will, risk-on assets such as Bitcoin and tech stocks will be the main beneficiaries. Bounce levels when you can. Bounce targets to be determined, but I'm looking for what will probably be, try to zoom in one way. Looking for what will probably be a double-digit 10% plus gain on QQQ and many of the big tech stocks. So more of a hard long here with stops and price targets to be determined. I know that part of trading, always have a trading plan, and we'll see. I can tell you right now, I'll allow them one, but only one stop rate if they want to punch it down below this morning's pre-market lows to blow out the stops. I'm talking about they being the nefarious powers that be, the firms on Wall Street that have enough capital to move the market with sell orders and flash and spoofing, and all that good stuff, and computerized trading programs. But not more than one stop rate. So either they undercut the lows, blow out anybody that bought, the dip today, week-ended longs or shorts that just, didn't see it come in, and they said, okay, well, if it will, I'll just, sit tight. The market's reversing after the open today, and if it goes below today's low. So there's probably, my point is, a lot of stops at below today's lows. And so it'd be the ideal place for a stop rate. I'm also going to say I don't think that's going to happen. I think we hit, again, as I showed you, multiple support levels, and so therefore I think we'll see one of the biggest intraday reversals in years today. We were down plus 5% I think in the futures, and I think we'll close green today. I think there's a potential for that. Either the stock market completely crashes. And just a little sidebar here. So far, I haven't seen a real crash, just impulsive selling. Everything I told you we'd see, the selling would begin to accelerate. It was a crowded rush for the exits. Things I've been talking about for months and more recently. So that's a possibility, guys. I want to talk on that. Again, the risks are not bilateral. They are bilateral. I mean, we could crash. And the only thing I think it will do it is such as a big fund or a brokerage firm blowing up. And when they do, by the way, guys, funds, big, funds, hedge funds, big, and brokerage firms and other things, related to the market and the financial system, they don't blow up typically randomly on any given day. They blow up when they're over leveraged, and then there's a huge, big move in the market against their position. And all of a sudden they have to unwind that position. They're basically, they're bust. They go bust. So those odds right now, today, at this moment, as I talk, are infinitesimally higher than at any point in years, because we've just had a very swift, one of the biggest, fastest drop in such short order in a long time. So what happens is they don't have time to position. That's why I talked about the VIX was it just a great level. The VIX was one of my favorite trades recently, and it was just exploded up. And again, it was everything. Whatever. I've covered everything I've been covering now for weeks and months. So all those ingredients were there. And the $1 million question, is there more? There may be. So I wanted to just kind of reiterate this, that I'm sitting here talking about all in, full long, hard long, all those strong words. It could go the other way. We haven't had a real crash. COVID, we saw the market crashing because things were different. We were shutting down and all that. But we can't have 87 again for those of you who've been around that long. 1987, Black Monday, with the S&P dropping over 20% in a day. That they put in circuit breakers. So worst case scenario, if it starts to happen, they uptick rule kicks in first, then they trading halt, and if they after the 1 hour or whatever it is trading halt, if it happens to go even lower, then they'll shut down for the day. So market will get to where it needs to get if there's something bad enough. Again, something blows up, it will go from point A to point B. Point B being where it's ultimately going to go based on the technicals and the fundamentals and all that. However, the rate of descent will be limited. But again, what does that mean? What that means is, and again, I'm looking right now upside, but it means that, you can only have, the red candles can only be so large, is what I'm trying to say. So you can't have this right now, but you can have day one, day two, get there in a few days instead of one day, that whole 23% or whatever it was drop in the S&P back then. I don't know how I toggled over to QQQE here. I must have clicked on something by mistake. Let's go back to wherever I was. All right, so let's just dig into the charts. Let me wrap this video up, get out to you guys. So T2 hit. Remember, that was I gave you this all the way back on June 26th. It was first on the weekly chart, but I've been sharing the same targets here. I have them on the daily. And in recent videos, starting back on July 29th, I told you I was going to make it and change T2, which used to be right here at 413, to this level. It's price plus the 200-day moving averages. So kind of to recap. And again, as I've said before and showed you many times, it's not unusual to see the indexes temporarily pierce through the 200s when they come to visit them hard from above or below. Same thing when you rally, only to see it close that day or within the next couple days back on or above the 200s. So the fact they went under today is only all the better, because then those that are super mechanical and stiff trader, we're below the 200s, I'm going to short more or short. No. It's again, it's more than common to see that momentum fueled overshoot there. And then more so when you regain them, those that did short under the 200s would then be squeezed out because the whole logic and reasoning for shorting is now taken away. The markets have successfully regained and are above the 200s. So boom, 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 boom. Stop loss orders start to get hit on short sellers. All right. Longer term traders, I maintain what I do. I've been very, very clearly differentiating between active trading and swing or long-term trend trading. I maintain these targets. However, this time around, we're looking at a bounce that can actually exceed the previous one. Remember last time we gained all of this 5-6% bounce here. We could be looking at a more substantial bounce right now. I just wanted to say that. Where to? And that's what I mentioned in this here, in this comment here. Yep, yeah, I already said that. Hard long stops and price. Really, the stop allowance, well, I don't think it's an issue now. In fact, we're far enough away. We get far enough away, I'm not going to allow a move down below today's pre-market lows. I'm going to be raising those stops up at this point. And I think we're already there now if we can get a little bit higher. So as I just said, either the stock market crashes and or we're likely, which is obviously my most probable and likely scenario, to see a potential rip your face off rally once it sinks into the sheeple's heads that we went from Powell. Just remember, Wednesday, not even a week ago, few trading days ago, on Wednesday afternoon, Powell repeatedly, I watched his press conference, repeatedly said, nope, we have absolutely no plans to cut rates at the September meeting. We haven't made that decision, blah, blah, blah. We'll put the data dependent. And so you went from that to the Fed Fund futures pricing a near probability of a 50 basis point cut. And I even heard something about a potential emergency cut today. Powell, like I said, the Fed will react to the stock market. They know the stock market and consumer confidence and spending go hand in hand. And so that's why, like I said, why my targets, tend to be so aggressive when others can't even see the potential for a 50% drop, because it's a vicious cycle. And so when the technicals play out, as they are clearly now, stock market drops, first 10, then 20, 30%. Everybody's wealth drops. Quit buying yachts and boats and eating out and ordering the lobster and the filet mignon. Back to Burger King, McDonald's, or cooking at home. It's less travel. It's to me it's very clear, and that's where a lot of folks just can't see how can this economy, with jobless rate being so low and everything hunky dory and earnings so high and stock market up. Again, it's all interrelated, and it's a vicious cycle, and it's a cycle that's played out time and time again. So we'll see. But as of now, let's just talk near term, because those longer term targets I still very much maintain. If something happens today, tomorrow, or this week, I may get back short. Let you know. But as of now, like I said, let's see if we can hold these 200 days. I'm going to go over a few more charts and we'll wrap this video up, get it out to you guys. So anyways, I went on to say, remember, these are the same sheeple. They couldn't get enough NVIDIA, Microsoft, and Alphabet over the past year or so, no matter what the news was. Remember, good news was good news, and bad news was on the economy was good news, solely because they were certain that a rate cut pivot was imminent. And it was supposed to happen a year ago, or almost, and earlier this year, and kept getting pushed back. Now they will have, that's supposed to be or soon will have exactly what they were buying stocks for before, despite nosebleed valuations, breadth deterioration, everything else. So my point is, if they like NVIDIA at 140, they have to love it here at 90, right? So that's it, guys. So that basically is, these stocks have corrected. They're corrected down to 200. I view it'll be a bear market rally. That's what I'm looking to get here. I think we'll see the rally. I think it'll start to if again the market needs to stabilize, if and when it does, that's when you'll start probably seeing buying step in. The narrative again on TV will be that, okay, yep, so the economy is slowing down a bit, and maybe we'll head in, who knows? I don't. Everyone's going to say something different about where we're going in the economy, but the case for buying stocks will be that the valuations have come down to more reasonable levels. Blah blah blah. Apple and Alphabet, and they all have the big stock buybacks still to support the market, and most importantly, we're going to get a rate cut, not just a quarter point. Now we're going to get a 50 basis point, and the dot plot's going to change. We're going to get more cuts. They're already pricing in now multiple cuts coming this year. And so that would be the psychological boost again. So does it work longer term? No. They'll buy it thinking it does. Probably get a rally, maybe a back test of the trend lines. Like I said, my target's to be determined. Remember, the way this works, if you want simple targets right now, well, same levels I gave you before on the way down as support levels and targets. Are then support once broken becomes a resistance. So you have that 44, 49, 70 T1 there, and the trend line. Remember that was the first. It was either or, and we hit them both, the trend line, and then. So that is right now. If we hold, if we rally off the 200s, there's your minimum target. And again, if it took a little while like this, and very much a potential and a likely target. This is kind of where I'm leaning now, guys. Is for a back test of the trend line and this level right here that I had 473.56, and that's going to be from today's lows where we reversed. About if and when we get there, we're talking about, like I said earlier, about a double-digit gain in the Qs, and you'll see much more than that. So we'll call it roughly 10-11% as of now. I'm doing this video in the morning, and I may be singing a different song at 2 p.m. today or noon today, depending on what the market does. That is my outlook now, and that's it. So What we need to see today, and today is an important day. Want to see ideally the market close on or above these 200-day and that price support level I have there at 431.80ish right there, right? That will show you that we fell and held support, even though this one we went right through. Let me give you some of the other leading stocks. I already gave you NVIDIA. Let's start there because that was along with the S&P 500 SPY. I gave you NVIDIA, SPY, and QQQ all here on June 26th right here before we even broke down. T1 has now been hit. It's the intersecting. You have dual support, really good support, guys. So this is where, if the market, can't rally here soon, that's bad because this is good support. It's price support and more, even better, uptrend line support from the October 2022 lows right there. Very clear, well-defined trend line. Oh, and Fibonacci, key fib retracement support, 38.2 Fibonacci retracement to the button today. Okay, on the undercut, and now we're back on the trend line. So I'm beating a dead horse here, but I'm banging some bull drums, guys. If you can't hear it, that's it. So, and just a hair above the 200-day moving average. But again, the 200 days and as well as price support, the way my brain works with this collectively, look at all the market leading stocks, not just tech, but mostly big tech. You can look at financials, you can look at everything else, but mostly tech. The market's all about tech. So when you have the majority, you're never going to have them all hit their 200s at the same exact time. That's never, ever happened, never will happen. Some are going to hit them first, some are going to undercut a little bit, but collectively when most of them hit, and especially those that have undercut, come back up. So when you have the bulk of those coming in for the first time in months to test the 200-day moving averages, that's when you're likely to get the buyers stepping in. And remember, yesterday we had a couple, but the majority weren't there, and now they are. So I'm going to go through all those for you real quick. So anyway, that's it. So we're good for, remember, the day of bearish engulfing. I was in Italy, got that out to you. That was pretty much the first short entry on NVIDIA, the most recent one. Good for about a 30% drop, down to my first target, a little bit better. Also, on the short-term chart, too, we hit that T3. I'll get to that in a second. And I still maintain these deeper targets. It's just a matter of, hey, do we bounce first? I think so. I'm going to be long. I'm long the NQs heavy now and short the VIX. I told you I went long. Took a mild long home last night. And as I said, I think I mentioned, got up 6 p.m. last night. Boom, stopped out right away. The futures gapped down. Thought about reversing. Wish in hindsight I did, but it just wasn't. We were in too close a proximity to that support level price target on NQ. So I just waited and then went to bed. It was getting too late, and we didn't have I wanted to see it recover, and we never recovered it. I'll get back to that NQ chart in a second. All right, so again, where to? Then we drop down to the shorter term charts. So this is there was the wedge break, the bearish engulfing candle on the daily. This is my 60-minute chart. Hit my first target, hit it again. First, I took it out, hit T2, second target zone, bounced, then went down. And we just today hit T3. We overshot it briefly, put in positive divergence on NVIDIA. Great looking stock right now. Time to cover shorts. Again, that's the final near term swing more active swing trading. I know I get confused because I talk on multiple time frames, but all along I've covered this chart and the longer term one I just covered. So at the same time we hit the final near term swing target here, T3, on this 60-minute chart for what we'll call it. We'll play the high breakdown of that wedge. It's highlighted 32% gain. We also hit the primary uptrend line, which is also on that weekly chart, the target there. So that's it. And just in NVIDIA alone, if they come in and buy NVIDIA, that's the poster child for everything lately. And so that's likely to bring the rest of the lot up with them. I'm talking about these guys here. So let's talk about these guys, and we'll wrap the video up. Apple back to really good support. Why is that good support? It's a level I've had on the chart at 98.39. Why did I have that level there in recent videos? Well, it's double top high right here. We broke out, and we didn't just break out and meander on through. It was an explosive breakout once Apple took out that previous double top high resistance. put in this bearish rising wedge. It's highlighted, broke down, broke the secondary trend line, back tested, boom, back to support. So to reiterate, Apple isn't at support. Apple's at good support, great support, really good support. 200 days are a little below if it wants to go a little bit lower. But it's sliced through the 200. See, I always treat every stock on its own. It's come through the 200s quite a bit recently, so I'm putting higher weighting on price support for Apple right now. In the past, Apple's done great behaving off its 200s, meaning in bear trends, rallies back to the 200s provide objective short entries, and pullbacks during bull trends provide objective long entries. And when it crosses below, then you know the trend is likely changed. Microsoft, it was ugly all around. Primary trend line break, 200s taken out, but it did hit this price support the other day. It's trying to rally back, probably close the week back on or above the 200s in my opinion. NVIDIA, I already covered pretty detailed there. Alphabet, first tag of the 200s, like I've been calling for. These stocks come and visit. Last time Alphabet visited the 200s was right here. Boom, exploded higher. Time before that, boom, exploded higher. Time before that, boom, it just had taken them back. So it's been in a primary bull market uptrend, and it still is by this definition. It's above the 200s. And Pavlov's dogs do what they do. And the bell rings, the dinner bell rings, they come in and buy. It doesn't mean the 200s can't be taken out, but probably not without a fight. And again, guys, a collective thing. And again, sometimes these things pierce the 200s slightly. I use both the exponential and simple. You've heard me say it 1,000 times recently. Only because some traders buy one, some traders buy the other. Therefore, I use them collectively, and I give the last of the two, to get taken out. Amazon, clearly taken out the 200s, also behaves very, very well off those, meaning downtrend, short rallies back to the 200, uptrend buy. So, longer term, that's pretty ugly there. It's also taken out the trend line. So look, just right now, NVIDIA like a lot better than Amazon. Amazon is ugly. Now, Amazon's a market-leading FANG. It'll probably go up in sympathy with them. I wouldn't short it or any of these guys, right now. Certainly long, but the ones that I've told you that look better, such as NVIDIA, those are the ones that are probably going to bounce better. And look. We come back, so where do I start shorting? Well, when I see Amazon, for example, come back to test the 200s and or especially this trend line from below, there's a gap. If it wants to punch above there, fake everybody out. So that's kind of the re-entry. Now, I don't have this one. I didn't have it before. I'm just saying I'll factor this into my analysis. If I decide to take it, then I take it. But that's kind of the bounce back target zone for it. But again, it's by all metrics an ugly chart, and it kind of reinforces my longer term views that this is just the initial shot across the bow. Meta still coming up to the 200s. If I turn on the pre-market trades, let me do that. We probably see a lot of these hit them in pre-market. Yeah, you can see that white candle. All right, that's it, guys. I don't know what else there is to add other than that there's NQ, perfect reversal off that T6. This is what I was talking about last night. There's all these levels. T5 has now been regained. So the bounce, this level right here, T4, that's the last one we gained the bounce off of. Remember this T4 reaction? I was persistent and consistent since we hit it the first time. I think it was on a Thursday. Kept reiterating that looking for a tradable bounce off there. That's exactly what we got. The biggest bounce in such short order in months. Gained it, and then that was right at the high that day. Said, boom, the bounce targets were hit on QQQ and NQ on the other time frames, and boom, we went down. So that's it, guys. We're swing trading here, and as of now, this tag of T6 plus all those other levels I just showed you on the key stocks is excellent support, oversold conditions, all that good stuff. So I will sharpen my pencil and give you bounce targets. But again, right now I'm not looking. They're not going to be hit today. I'm more concerned with am I going to be stopped out of this trade? I don't plan to take any profits because if they hold and recover these 200s, we're looking at a rally that's most likely going to last days if not weeks, and be measured as again in about at least double digits in QQQ, and probably well into the double digits on the better looking stocks like Nvidia and some other ones, old crowd favorites. And of course I'll look for other things. Grains are still looking okay if you want to diversify. I told you I don't have a strong conviction on metals. This is my hyper focus right now. This is where I can tell you right now I'm going to be immersed in the indexes and all things related, meaning tech stocks, semiconductors, which should bounce obviously as well. Here, I'll cover that for you. More bang for your buck there. SOXX, boom, support right here. Let's see what we look like on the 60. Get RSI divergence there. And there's different ETFs too for the semis. Remember, some are top heavy in Nvidia. So XSD is another one. XSDs there. And over time, when I look at the long-term charts, these guys are all heading lower. SOXX. I'm digressing. Oh, there's SOXX. These dang splits on this program, they move all the lines, but this is you can see primary uptrend line we just hit right there on the semi. It's going low over time, big divergence building, but all my lines got mucked up when this thing did a split recently, so I'll have to replicate those. I'm going to stop it here, get the video out to you guys. You're welcome to ask chart requests on individual stocks or other things. I'll try to get to those as soon as I can. My thoughts as of now. Kind of long and strong at the moment, and if anything changes there, I'll let you know, and then I will kind of, as the dust settles this week and next, sharpen my pencil on some targets, and as always, continue to give you updates and if anything changes. That's most important. If anything changes, I'll let you know. This has been Randy Finney with Right Side of the Chart. Have a great day.